Good morning, one and all, and welcome to another one of my videos. I hope you are well, and I hope you had a great weekend. So, I have four pairs on watch today. Do bear with me because there is alerts going off absolutely everywhere at the moment. The market seems to be going into complete meltdown, so it might be uh, a bit tricky to make this video, but I will do my best. I don't usually like to make videos at from 7 a.m. onwards because the market tends to be a little bit volatile. I prefer to do it earlier in the day. You may notice, just to touch on it, some subtle amendments to my forecasts, to my entries. I have discovered something thanks to Falcon, which according to my data will help my results moving forward. But I'm not gonna actually specify what this actually is. I'm just going to talk through my videos and tell you what I'm going to be looking for, specifically because I know that people primarily that are watching this on YouTube and on TradingView, not in our private community, I know that many people will misuse the tweak that I have made. And one of the reasons I know that is because I used to do it myself. So when I used to discover something new, what would happen is I would get so excited by the thing that I discovered that I would overlook or pay less attention to the other confluence factors, if that makes sense. So I know that people will misuse that. They'll use it in the wrong areas. They'll use it when the sequence isn't great. It's something I discovered about my entries. And then they'll turn around to me and say, it didn't work. Well, nothing works if you made a tweak to your entries, but you're using it in the wrong areas and in the wrong sequence, then it's not going to work. And I know that you need a certain level of experience to actually know whether you're positioned properly and whether the sequence is okay. So, but you will notice some subtle changes. But without further ado, let's break these pairs down because we have four to get through, which for me can take a while. So I'm looking at this because on the weekly chart we had this here with this little base here. There's nothing below here until all the way down here. Okay. And we moved away from there quite aggressively, given that this is the weekly chart. We then tap into the area and we break just below, as we often do. If we're going to move to the upside, collect the orders that were down there. We have this morning star formation now. So a confirmed morning star formation, the bearish close, the star, and the weekly candle, the heavy-bodied weekly candle, which rockets to the upside. Okay, so I'm seeing this potentially now, given that price hasn't no reason to come back down here at this moment in time, as an impulse correction continuation to push higher. Okay, can the market come back down? Of course it can. The market can do anything at any time, but I'm just looking at analyzing what's happening at the moment. We have a bit of what's looking like an inside. It's looking like it. You'll see why there's a bit of a gap. There was some gapping during the night. But what we have is price at this moment in time is consolidating above all of this. Okay, all of this volume here, we're consolidating above for potentially that next move to the upside to tap into these highs. Well, that's what I'll be looking for. So as I drill down, so we had the fairly heavy-bodied daily candle. And now what are we doing? So the thing to note here is that we came down, okay, we made a little bit of a base there and pushed up. When I see a little bit of a base here that narrowly misses the retest of the back end of something else, that's usually a good indication that we're going to come back down, tap into the area, retest the back end of this, and then potentially move to the upside from there. Well, the clues on the 4-hour chart is that might be the case because we've come down to the area. We have the 4-hour candle, which has stalled in this area and retested the back end of that or tapped into it. So this could be, this kind of two-touch structure where you have the two touches there where we tap into this, do as I've just said, and then move to the upside from there. On the 1-hour chart, it is starting to look like, because we've come from a move down, it is starting to look like there may be, this could potentially be, some kind of bear flag to push lower because we have to be open-minded and neutral. So because of that, because we've come from a move down and we have potentially this shaping up, what negates the possibility of this being a sell, which I wouldn't be interested in because we're actually sat above all of this? Well, what negates it, in my opinion and experience, is if we break above what I've got marked up as my area of interest. Okay, so if we break above that and we consolidate afterwards, we've negated the fact that this was actually a bear flag to push lower, like so. Okay, so if we get a push up above the area of interest, then I'll be looking for either a 5 or a 15-minute continuation. Notice that these forecasts are a little bit more detailed. That partly leads on from what I was saying at the beginning of this video. Okay, so if we get the 5 or the 15-minute above that, and I've specified exactly what I'd be looking for with a slightly amended version of what I used to look for based on what I found within my data and based on what I was taught, what I discovered recently. And then I'll be able to manage this up to this high here for 2%. Okay, and then my target in this instance would be, so I would use the mechanical management and target there because we have a lot of volume there. Okay, and that is the high of the lot of volume. It's good English, isn't it? But that's what I'll be looking for today, folks. We shall see. We shall see whether that happens or not. So I've got an alert set just to see, just below the area of interest to see if we start pushing up to the area and to see if we actually break that. If we don't, then I don't need to check this pair. Okay, so that's all I'm going to be looking for from euro dollar. Moving on, pound dollar, a slight hedge in the other direction, just trying to take advantage of the pound weakness. As you can see, I've got some pound pairs on watch, and it looks like we might be able to get a short trade. So in this instance, we have all of this. Price drops out, drops below, and then leaves the footprint. Okay, we near miss to it, implying that that's where the volume is. We near miss to it again, once again, implying that that's where the volume is. And then we tap into it, break above, as we usually do if we're going to move to the downside, take out all the orders that were likely there, and then we get the impulse correction continuations to push lower. I like the fact that the sequence on this is very nice. I like the fact that we have a gap there to that low, which will likely be taken out. Okay, we've moved up. Have we tapped into anything? Well, we have tapped into anything. So if we just analyze this sequence, we get this move down. We get a bit of a strange start to the move. Then we come down, retest the back end of that, come down, come back up, retest the back end of this little consolidation. We then get this structure. Okay. We then leave a bit of a footprint. The clue that the volume was there was the fact that we near missed to it and near missed to it again. We tap into that. We move to the downside. Price leaves a little footprint. So no need to come back up here because we've already tapped into that. But we have a footprint there. Previously, I was looking for entries down here because we had this little footprint. Okay. And that's just my alert on this pair going off. So previously, I was looking for entries there. But I'm also not surprised that we've come all the way back up to here. I am mindful of that, the fact that we have pulled up quite a long way relative to this overall move down. But sometimes that happens when we get a lot of volume here. Price breaks up and we get what we call an M-style pattern. Okay, where we get the volume generated here. It reaches up to the next inflection point and then drops from there. Okay, so that's what we call a M-style pattern. I am also mindful of the size of this move up. Okay, and the fact that we haven't yet negated all of this bullish candle here. Okay, so what does that mean? Well, that means that this could potentially be something like that, which then pushes higher to tap into maybe that one there. Okay, so I'm factoring all this in. So the fact that we haven't negated all of this bullish candle there yet means that what I'm looking for is, let's just get rid of, oh my God, what's happened to him? Let's get rid of all of this off the chart. So what I'm looking for is I'm looking for price to drop down. That alert that you may have just heard going off, or the silence in the video, as it often often comes out on the videos, that was just my alert going off. So what I'm going to do afterwards. So in this instance, because of how far we pulled back, and because there's that sat not too far above this relative to this overall move up, I'm looking for a 15-minute continuation. So what I shall do after this video, I'm going to set an alert not an alert, sorry, a Google Calendar reminder to remind me to check this pair in an hour's time, because for a 15-minute continuation to form, if this starts to drop out, that would take an hour and a half to form. So what I'll do is set a Google Calendar reminder to remind me to check this in an hour's time to see if that 15-minute continuation is forming. Okay, the market is moving very fast at the moment, and that's why I don't like doing these videos at 7 a.m. because now I have to think even more quickly than I normally do. But I'd be able to manage it down to this inflection point there, and I would be targeting this low, and I would use the mechanical management and measure from there to there, and then I would set a take profit there, which would give me something in the region of 10% to work with. Obviously, depending on the size of the stop loss, depending on the size of the flag. So that is pound dollar. Let's speed up a little bit. So at the moment, this is looking like, so we just analyze this. So this is pound Kiwi. So pound Kiwi, we have this more of a wick than anything, but I think there was another high there, and then we have the wick. The clue that was a valuable area overall is the fact that we near missed to it. This time we did actually tap into it again, and I suppose that if you look at this, no, it wasn't. I was just checking to see whether that was a wick fill situation. But what do we know? On the higher time frames, we usually break above if we're going to move to the downside. We didn't here. We only tapped into it. Then we near missed to it again, suggesting once again that there was liquidity likely up here. We then get a bit of a failed sell move, break higher, and I'm just seeing this at the moment, unless this completely breaks above, I'm seeing this as an impulse correction continuation to push lower, because within that we also have this crudely drawn reversal structure. So this could be an impulse correction continuation to push lower to start tapping into the base of this, or even just down to here as a first higher time frame target. And of course, if we start rocketing to the upside, then I'll just take this off of watch. What we do have here, and this is one thing to note, so we have the move down. I'm looking at we have the impulse correction. Price comes up, retest the back end of that. We then get a move up there. We get a little bit of a gap to there, which may be one of the reasons why price is pushing higher. And the other reason is because this little footprint that was left after we broke out of all of this narrowly missed the back end of this. Okay, if you look at what we're doing now, we've narrowly missed it again. Actually, if you just extend this out. So I'm just looking at what's happening now, analysing this as it's happening. We've near missed that again. So we've narrowly missed the back end of this again. So the reason this might be coming up is to tap into this again. Okay. What it also could be doing, and I am mindful of this, if we just analyse this on the 15, what are we doing on the flip side? We're near missing to this little consolidation here. So I'm also mindful of the fact that this could actually be something like this, where we tap into that. That becomes the base because this is separate to all of this, and then we move higher from there, okay? So I'm mindful of getting trapped into anything here because of that. So what I'm going to be looking for, with all of that in mind, what negates that possible buy structure? Well, what negates it in my experience, okay, is if we break below this area of interest. If we do, we've completely negated this as being a bull structure, and then I'll be looking for either a 5. By this point, it will likely be a 15-minute continuation just because of how far we will have dropped from there. But because we would have tapped into this, and possibly even before that happens, retest the back end of that low to the left before dropping. Because of that, if we were to do that, tap into that, retest the back end of that, and drop below and correct afterwards, I think a 5-minute continuation would be more than sufficient after grabbing that much. After grabbing that much liquidity. Okay, so what I'll be considering is either a 5 or a 15-minute continuation, and then this I don't think holds much weight. But given that it's like the first little mini inflection point on the move down, we would have 4.5% to work with roughly to there, and then once again I would use the mechanical management tool to measure from there to there, and I would set the take profit from there to there. So I trail my stop loss whilst also setting a take profit there for something in the region of 6%. We shall see what happens. I have an alert set just below here to see if we break lower. If we don't, then I don't need to check this pair. Would I consider a bull structure? I would, but that probably wouldn't be ready just looking at the candles until tomorrow. So I'm just trying to factor all of these things in. Last up is pound yen. I've got just enough time to get through this. Now, this is slightly different. I'm seeing this slightly differently. So the sequence isn't great. One of the reasons this is last on the list is because we kind of broke above here, broke to the downside, broke back up, broke back down again. We're not fully trading back below here, which would have been better. And we have a near miss to this high here, but I'm mindful of that as well. However, what we might be doing, this might just be an impulse correction continuation to push lower to take out this low, which this low near miss to, and then potentially, maybe we move up from there to fill this high, which this high near miss to. Okay. So we do have momentum on the weekly. That is a factor in my thinking. But why is price coming back up? Okay. Is there a reason if we just drill down? So one of the things I'm noticing is that we have tapped into this area of value by way of full-bodied price action. So that's a tick in the box. There's no wick fill situations as such. On the 4 hour, we got there by full-bodied price action, not a wick. Same on the 1 hour, just about. Okay, so we might be tapping into this volume, okay, which was where there was an exchange of liquidity, which caused price to smash through all of this here. Okay, so there may be a lot of liquidity there for that reason, for price to actually do that. This here, although we've kind of come back up and narrowly missed it, what I'm seeing, because if you notice here, the market gapped, okay, and a lot of the time these gaps will be filled, okay, so we might not necessarily need to tap into or break above here just because we've already tapped into it and retraced all the way back up here and near missed to it. What we might have been doing is actually coming back up just to fill the orders that were within this gap, okay, that hadn't actually been filled, and that's why we're kind of seeing a kind of evening star formation from there. But once again, because this could be a, where we get something like that, a bull structure to push higher, especially because of the sequence. The sequence is a little bit off. What I'm going to be looking for is the following. I'm going to be looking for price to show its hand, which in this instance would be a break below this area of interest, followed by a 15-minute continuation. That'll be my entry requirements, and then I'd look to get short on the breaker within it, and then I'll be able to manage it down to there for something in the region of 2.7. Down to there, we'd have about 9.5. Okay, and I've got the alert set, which may trigger very, very shortly before this video finishes. There is an alert set just above the area of interest, and then that would satisfy me that this is not a bull structure to push higher. And just to touch on these, the little discovery, the little amendment I've made to my forecast, I actually checked this against my data several times, and I had a look at my losing trades as well over the weekend, and one of the losing trades I was actually specifically looking for, but there was another 5, I think, that I just randomly pulled up, just random losing trades over the years, and I discovered in total. So where the one that I was intending to look for is concerned, and the 5 that I randomly pulled up are concerned, I think 3 of those just wouldn't have been taken, just because of it was just a time frame usage issue, if you want to call it that. And I looked at my winning trades, and this alteration was prevalent. So if executed the correct way, it was prevalent. So I unwittingly executed it the correct way in almost 100% of my winning trades. So obviously that's given me even more confidence than I had before. But anyway, I will things will become clearer where this is concerned moving forward. And of course, if I place a trade today, I will update you with a trade recap regardless of the outcome of that trade. But for now, I don't know how I got through this video, but I'll speak to you again soon. Thanks for watching.